You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 10th day of June, 2026. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast, that's our live training room. So to get into that one, you got to be a member or taking your 1-week free trial. This broadcast, on the other hand, the afternoon broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go here to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email and it logs you right into our platform. The benefit of doing it that way, you immediately have access to the question box so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy. So you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 3,000 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to. But if you're new, it is a great resource to have at your fingertips because it allows you to actually see how we've evolved over all these years, day by day by day. youtube.com/CFRN. On the left side of the screen is our schedule for each afternoon broadcast. At the top of the hour, 1 p.m. Eastern, Michael will join us for a recap of what happened this morning in the live training room, and then do a little live trading as time and the markets permit. Right now, we're just going to dive right into our daily devotional, which is where we start each and every afternoon broadcast. The topic that we're on, still on, and will still be on for a few more days: everyday faith. Our scripture today is Luke 17, verse 25. And I'm going to share it from the NIV translation. But first, he must suffer many things and be rejected by this generation. Again, Luke 17:25. One of them, when he saw that he was healed, turned back. 10 were healed, 1 returned. 9 received, but only 1 responded. The difference was not in the miracle, it was in recognition. Gratitude is the beginning of witness. Now, we're talking about the 10 lepers who were healed. I'm sure you're familiar with the story. The one who returned did not offer a speech. He simply fell at Jesus' feet. Before he ever spoke publicly, he responded personally. And that is the proper order. Witness that is not rooted in gratitude just becomes mechanical. When you truly see what Christ has done for you, words form naturally. But many believers move on too quickly. We receive forgiveness, we receive provision, we receive guidance, and then we just move on. The one who returned was seen. Jesus asked him, "Where are the other 9?" He notices gratitude. There was a man I once knew who prayed 3 simple words every day: burden, opportunity, boldness. He asked God to give him a burden for people who did not know Christ, an opportunity to speak, and boldness to obey when the moment came. But before any of that, he returned daily in gratitude. Have you returned lately? Have you paused long enough to recognize the depth of what you have been given? The gospel is not a concept you accepted once, it is rescue you continue to live from. Gratitude clears the eyes. Burden follows clarity. And when the heart returns, it does not, it cannot stay silent for long. So ask yourself this: have you taken time recently to thank Christ specifically for your salvation? Not the house, not the cars, not the marriage, not the family, but for simple salvation, everlasting life. If not, today might be a great day. This moment might be a great moment. Let's pray. Heavenly Father, we return again. Our prayer today is that you would give us gratitude that becomes burden, opportunity, and boldness. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Wednesday. Let me give you the numbers from around the world. And we'll take a peek at a few headlines. Then we'll go to the alerts. Then we'll go to the charts. Starting here in the U.S. with the cash markets, or the indices as they're called. It's not pretty, but you probably already know that. Dow is down 638 points, 1.25%. The Nasdaq's down 346, almost 1.5%. S&P 500 is down 73, 1%. And the Russell 2000, our man in the street, is down 8 points. In the commodity basket, crude oil up $2.57, trading 90.77 last. That's a gain of almost 3%. Gold down again, big, $138.80, trading 41.47 last. That's a drop of 3.25%. Silver down 27 cents, trading 64.97 last. In the Asian markets at the close, the Nikkei fell 1,237 points, almost 2%. Shanghai dropped 16. The Hang Seng fell 157. And in the European markets at the close, FTSE up 27. Is that the only green on the screen? It is. The DAX down 214, almost 1%. And the CAC down 41. So, we had a red day in Asia. It was a mixed day for the UK, thanks to those 27 points from the FTSE. And it is a big red Radio Wednesday here in the US of A. And this just popped up on my screen. Trump signs $70 billion immigration funding bill after months of delay. Maybe we should check that out. President Trump just signed a $70 billion immigration funding package, ending months of debate over immigration and customs enforcement and customs and border protection. Senate and House Democrats were united in their opposition to the measure amid concerns about immigration enforcement practices. But Republicans were able to pass the package along party lines thanks to a congressional procedure known as budget reconciliation. Progress on the immigration bill was nearly derailed amid Republican pushback to Trump's creation of a $1.8 billion anti-weaponization fund to pay allies who he said had been wronged by the federal government. Okay. Well, that was a freebie. And we'll go to the other articles. From Bloomberg, President Trump has said Iran will pay the price for delaying negotiations for an interim peace deal after renewed attacks overnight put further strain on a fragile 2-month truce. I mean, when are we going to accept the fact these people do not want to make a deal? Now, the Iranian people, they would love a deal. Any kind of deal. They just want to be free. They just want to be able to get up every day, go to work, live their life, build a business, come home, love on their family, and maybe even watch a little TV, All the things that we just take for granted. It's all the people of Iran want. It's all they've ever wanted. Unfortunately, this regime and the IRGC says, not for you, no. Now, while the head of the snake enjoys all those luxuries, the same with the IRGC, the Iranian people are going hungry. They're in the streets protesting. They have no weapons. They finally got back one weapon, the internet, and it's brought them back out into the streets because they're finding out that the propaganda they've been fed for so long over state-run TV, well, it's just that, propaganda. They were under the impression that Iran was winning the war. So I know we all have questions. I mean, how many times did we hear that we decimated their Navy, we decimated their military, we decimated their Air Force, we decimated all of their radar, and then, boom, a U.S. chopper gets shot down. Well, was that some kid with a sling and 5 smooth stones? I mean, anyway, Trump wrote today on Truth Social, they've taken too long to negotiate a deal that would have been great for them. Now they will have to pay the price. Okay. We knew we were going to get to this point at some point. So the question now is, are we going to make them just stand in the hall and face the wall? Or are we going to blister their backside? Well, we got to get their attention somehow. Because obviously they have not been listening all along. And that's sad. That's just sad. But hey, it is what it is, right? Oil prices jumped after Trump's comments as the path to a deal allowing for the reopening of the Strait of Hormuz is further clouded. Brent crude, the global benchmark, is trading above 92 a barrel. After paring back part of the immediate move, U.S. equity futures have moved substantially lower and yields have risen. Interspersed with threats to resume strikes, Trump has repeatedly said a deal with Iran is within reach. Last time I heard him speak, he said a couple days. Could happen over the weekend. Even with tensions escalating since last week, he has signaled he wants to contain hostilities and avoid a return to all-out war. And that is incredibly noble. He has the military might to just snuff them out. But he's held back from doing that. But it's gotten to the point now where his strongest supporters are starting to question, did he ever really plan to finish the deal or not? My favorite president of all time. He's done so many incredible things in his first term and in this second term so far. Even this initial move on Iran, I'm behind it 100%. And we were so close to the finish line and we stopped. I'll be honest, I don't get it. But I never claimed to be the sharpest knife in the drawer, so we'll see. Talks with Iran are still ongoing, so they say, and the U.S. will continue to exert pressure on Iran to reach a deal. The comments from Washington came after the two sides once again exchanged strikes, underscoring how high tensions are running and the risk that intermittent, indirect talks between Iran and the U.S. may be derailed. The overnight clashes followed a direct confrontation between Iran and Israel earlier this week, but halted after Trump called on both sides to stop. Trump said he retaliated against the Islamic Republic for shooting down a U.S. Apache helicopter near the strait. Tehran didn't confirm shooting down the aircraft and said it was reconsidering whether to persist with negotiations in light of the U.S. attacks. This is what we're dealing with. But this is nothing new. This is what we've been dealing with for 47 years. Which is why it was so great to see a president in power willing to take the action that every other president has shied away from. I mean, not only shied away from, but paid him to behave. How'd that work? Not so well. The billions of dollars that President Obama sent in the dark of night, pallets of cash in all kinds of different currencies, which allowed them to enrich their uranium, continue to sponsor Hezbollah and other terror organizations throughout the Middle East. We paid for the very monster that we're fighting against. Thank you, President O. I thought President Trump was going to straighten it out, and I'm praying that he will. He's still got my support. I just hope he'll do something, and do it soon. Because the American people are starting to get, well, let's just say maybe not everyone's as big a fan as I am. And they're reminded of it every time they go to the grocery store, every time they go to the gas station. Meanwhile, we're looking at one of the most expensive stock markets in decades, and it might not end well. Studying price to earnings multiples on companies amid the great stock price boom of 2026 is so yesterday. We all know the multiples on most companies are well above their historical norms and prior market peaks. If you are looking for another indicator that the stock market is smack in the middle of a bubble, look no further than Goldman Sachs strategist Ben Snyder, who did a deep dive into the enterprise value to sales ratio being afforded to companies right now and compared them with historical norms. At the basic level, the EV sales ratio measures how much an investor is willing to pay to own a piece of a company's future sales. Today, they are clearly super excited to pay a major premium, likely amid fear of missing out on the top line impact from AI. This is more FOMO than I've ever seen. That's the fear of missing out. Even Warren Buffett's favorite stock market indicator is screaming sell. It's now flashing a major warning sign amid the AI stock frenzy. The so-called Buffett indicator stands at about 232.5%, up a sharp 13% from the March 30 lows per data from Guru Focus. The indicator has never been higher, going back to the earliest Guru Focus data in 1970. At current levels, the indicator is in the significantly overvalued zone, with stocks potentially on a collision course for modest negative returns over the next year. The Buffett indicator takes the Wilshire 5000 index, viewed as the total stock market, and divides it by the annual U.S. GDP. It rose to fame following a 2001 Fortune magazine article written by Buffett and longtime Fortune writer and Buffett insider Carol Loomis. The ratio has certain limitations in telling you what you need to know, Buffett explained in the article. Still, it is probably the best single measure of where valuations stand at any given moment. For his part, Buffett has bet on the AI future by maintaining stock investments in Apple and more recently adding to his position in Alphabet or Google. Current Berkshire Hathaway CEO Greg Abel recently committed a $10 billion investment into Alphabet to help fund the tech giant's booming artificial intelligence infrastructure. Even still, it's hard to argue that stock valuations have reached worrisome levels. Besides the Buffett indicator, trading activity in U.S. stocks with high enterprise value to sales multiples is near a decade's high, exceeded only in 2000. And we know 2000 didn't end well. The velocity of the recent equity market rally has generated investor anxiety about the sustainability of the bull market and spurred a search for signals that the peak is near. Well, when we get to the charts, I think you'll see that maybe the peak is near in the rearview mirror. It used to be all about the FANG stocks. Now it's the mangoes. With SpaceX about to break records with an IPO on Friday, Anthropic about to break records with its pending IPO, and OpenAI racing to match or best its arch rivals with its own potentially record-breaking IPO, the tech industry will soon have a new set of public company overlords. Should all these IPOs take place as planned, these companies will be replacing the vicious-sounding FANG cabal: Facebook, Amazon, Apple, Netflix, and Google. FANG. With the delightfully sweet-sounding though truly sour and atrocious if consumed unripe, mangoes. Mangoes? Meta, Anthropic, Nvidia, Google, OpenAI, and SpaceX. Mangoes. Bye-bye fangs. Hello mangoes. We'll see. We'll see if that holds after all these IPOs. Remember, we talked yesterday that almost every high-priced IPO that goes off at big bucks gets hit real hard in the following year. We saw Facebook drop to $18 after their IPO. So the question is now, I've been giving you for months ways to get into this SpaceX IPO ahead of the IPO. I'm starting to wonder if maybe it's not more prudent to wait for the sell-off. Of course, you have the risk that maybe this time it's different. How many times have you heard that? Speaking of SpaceX, university endowments across America have struck it big with investments in SpaceX. In some cases, the holdings have gotten too big, and investment offices are looking to reduce or hedge their positions. The windfall is ironic considering Elon Musk has called college overrated in the past. Well, we've all seen the disaster in California. President Trump is renewing his call to pass the Save America Act, to secure elections after late arriving ballots in the Los Angeles mayoral election flipped the race against the Republican candidate. The chaos happening in California only further underscores what the president has said many times: pass the Save America Act. In California, when you register to vote, you can use your Planet Fitness ID card. You can use a prescription a pill bottle, with the label on it. Yeah. A library card. Yeah. It's comical if it weren't true. If you've been following this mayoral race in California, Republican candidate Spencer Pratt initially ran ahead of Democrat candidate, or socialist/communist candidate, Nithya Raman, for second place in the election night tally, behind incumbent Mayor Karen Bass-Ackwards. The state's primaries allow the top two vote recipients to advance to the general election. So it could be two Republicans, two Democrats, which even that whole part's wonky, but those are the rules in California. However, subsequent mail-in ballot batches that arrived up to a week after Election Day, in compliance with state law, heavily favored Raman, even over Bass, and Pratt's lead evaporated. Monday, the Associated Press declared that Raman will advance to the runoff election against Bass, who is also a registered Democrat socialist. Unbelievable. Many pundits predicted this is what was going to happen, and, well, they got it right. You didn't have to be too smart to see it coming. Last but not least, a Trump-aligned organization is dropping a new six-figure campaign ad against Texas Democratic Senate candidate James Tallarico, who recently flip-flopped on his policy approach to sex transitioning procedures. The 15-second AI-generated ad shows Tallarico, as he has been nicknamed, parodying My Favorite Things as the character of Maria in The Sound of Music. The ad was first obtained by the caller. The changed lyrics go like this: boys in white dresses with blue satin sashes, girls dosed with hormones till they grow mustaches, changing the gender of all your offspring. These are a few of my favorite things. The six-figure ad campaign is funded by Citizens for Sanity, a conservative nonprofit organization that historically funds ads targeting Democratic woke agendas, absent border security, and rising crime rates. The nonprofit dropped $93 million during the 2022 midterms, funding ads that expose the climbing number of crimes in Democrat-governed cities. It is very, very dangerous to live in a blue city in America anymore. It really is. People are afraid to go out at night. Gosh forbid you have to take the train or public transit, ride the bus. Wow. And if you're going to drive yourself, you better be armed, because somebody just got out of bed and realized that to get my fix today, I'm going to have to go jack a car. Hopefully it's not you. Anyway, wish I had better news for you. This isn't bad. Logic 247, our 24/7 around-the-clock E-mini alert service. It's not just the E-minis, it's also crude, gold, and silver. We're currently in week 410. Over the last 410 weeks, we have issued over 22,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, based simply on market structure, a simple process we teach all of our passport holders. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 42 alerts. When Valerie did the recap this morning at 7:15 a.m. Eastern, we were waiting on the outcome of 12. Of course, she'll update the recap this afternoon as she does each and every day. So at the time of the recap, we had 30 actionable alerts, 2 stop outs, or 7%. Like I said, over the last 410 weeks, the average has been 20% or less being stopped out. Last week we finished up with 12%. That was our first week in the double digits for a while. So it's only midway through the week, so we're in the single digits now, but we'll see what happens between now and the end of the week. Every logic alert has an entry price, long or short, an initial target, additional targets, then a final trade to target. The purpose of the logic alerts is to help you learn how to read a chart. If you never actually trade a logic alert, you can still use them for the purpose intended, to learn to read the chart. If you want to trade for a living, you're going to have to learn to read the chart. Somehow, some way. When you look at the chart, if it looks like chaos, use the Logic 247 alerts to learn to read the chart. It's really a simple process. Now, 410 weeks is a long time, over 7.5 years, but many years before we introduced Logic 247, we had our original alert service, the concierge trade alerts, and they're different. They're different in a lot of different ways, but for the purpose of this discussion, I'll just say this. They don't come out around the clock like the logic alerts. They're typically posted as a static report 5 minutes ahead of the Globex open each evening. So the Wednesday session that we're in right now began last night, Tuesday night at 6 p.m. Eastern. Stock stopped trading at 4 p.m. Eastern. Futures stopped trading at 5 p.m. Eastern. Then there's a 1-hour break for futures, and then they reopen at 6 p.m. Eastern. So today, the Wednesday session will end at 5 p.m. Eastern. Markets will go quiet for an hour, and then tonight at 6 p.m. Eastern, that will be the beginning of the Thursday session. So all of our traders had all of these targets 5 minutes before the market opened last night. The S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. As we go through the individual markets, you'll see these targets drawn out on the charts. Just keep in mind that our members had the targets 5 minutes before the market opened last night. So let's go look at the chart. Things are starting to look pretty bearish earlier on. Well, they haven't gotten a lot worse. Okay. So, daily chart of the bellwether, the S&P 500 Emini futures. And here's that. Now, when we were up here, a drop to the 24% fib, it seemed like so far away. Now, this day was only one tick lower than this day. The high here, the all-time historic high, 76.32 and a quarter. But then the following day, we were able to take out that high. We only got up to 76.32. It would have taken 2 ticks to put in a new all-time historic high. But to get to where we are right now, only took 1, 2, 3, 4, 5 trading days. Yesterday, we spiked that 24% fib retracement. Today, we've spiked it a little bit. We're kind of sitting just above it. We got red and falling overhead. Now, it's been a long time since we've had a pullback to the BBC. Price always reverts to the mean. In our case, the mean is this green line right here. Call it the BBC. It just stands for bull, bear, cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Below the green line, lower prices. Pretty simple. Now, the pullback to the BBC, or the reversion to the mean, we just call it the pullback to the BBC. The pullback holds more often than it doesn't, but eventually it will trade through. Now, this is very unusual, since this bullish cross, the first pullback to the BBC right here happened on June 5th. The pullback didn't hold. The first pullback almost always holds, but this time it didn't. That's the truth about trading. So when somebody tells you they got something that works 100% of the time, well, then they're probably more interested in your money than you are. Now, we closed below the BBC, and then price reverted to the mean, and the pullback held. And then we took a little trip down below the 24, and the pullback held. And now we're sitting right on top of that 24% fib retracement with red and falling overhead. The close today below the 24. Our next major support will be this low right here, 72.47 and a quarter. You might want to write that down. 72.40. In fact, round it up, make it 72.48. Okay. Now, that aligns pretty much with, and I talked about this yesterday. This was incredibly unusual. The black step line, when the market's moving up, the black step line will be on the left side of blue and climbing. When the black step line crosses to the right side of blue and climbing, we typically see a retracement back to the BBC. And the pullback holds more often than not. But this was a head fake. Real head scratcher. Right here, price crosses back to the left side. That made that an important price, important area. And it's basically where we found support yesterday. Also, right here where it crossed back over, notice this candle has a little wick sticking up, and this candle's got a little tiny wick sticking down. Lay your crosshair right between the two. And that's where the market would have most likely found support. But there was so much momentum yesterday as the market came roaring down. I mean, it really recovered nicely going into the close yesterday. I mean, think about it. We had a red candle all the way down to here. But by the time the market closed at 5 p.m. Eastern, we were all the way back up here. And it looks like we gapped lower on the open last night. We closed the gap. We had a little green candle, and then it just fell apart. Now, the more red and falling you have chasing price, the deeper you're likely to go. So, We already identified this major area for potential support. You wrote it down, right? 72.48. After that, this low right here, call it 7,200. And after that, you're at the 38% retracement. But the area that looks of most interest to me is right here. These tops across here align with these lows right here. And that's at about 70.90. Okay. Now, I'm not predicting the market's going to 70.90. It may go a lot lower than that. But I think that is a spot where if the market continues falling, we should get a very nice bounce. Might be enough to turn everything around. I don't know. We're technical traders. Now, rarely do we, the biggest fundamental thing that typically happens in a technical trader's life is the FOMC, which only happens a few times a year. But this business in Iran, inflation, crude, gasoline, oh my goodness. Those fundamentals are so big, it's hard to ignore, but the technicals still work inside of that big fundamental picture. And President Trump has promised us that once this thing in Iran is finished, crude and gas gonna drop like a rock. And all the other products that we purchase that require crude in the manufacturing process, they will drop too, but it's not going to happen overnight. It's going to take a little while. So with the midterms approaching, this couldn't happen at a worse time. But historically, whatever party, if there's one party in control of the House, the Senate, and the White House, what is this? Yeah, the estimate is like 9 times out of 10 they lose the midterms, or 8 out of 10. It's some insane number. So, I mean, it'll be a miracle if history doesn't repeat itself this time. Anyway, the ES, the vertical lines, all of the alerts are created on the 30-minute chart. Nothing special about 30 minutes, nothing magical. It's just a time frame I chose long ago to give me a good look at the market. So the vertical line separates today, Wednesday. Here's Tuesday. Back over here is Monday. The horizontal lines are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones every Monday since December 14th of 2009. Over 16 years, closing in on 17 years. The idea is when price rallies up to a weekly trading zone, we expect resistance until proven otherwise. When price drops to a weekly zone, we expect support until proven otherwise. This is not the greatest example of that, but we're not going to change anything because it's served us well for many, many years. Wednesday, Tuesday, Monday. Here was the Sunday night open right here. We had a leg and a retracement, and we had a leg where we did put in a higher high yesterday, but then we also put in a much lower low. And the market found support at the weekly zone. Only one of 3 things happens when price encounters a weekly zone. 70% of the time, it's consolidation. Like that, like that, like that. 20% of the time, rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. When that happens, price will typically, see, we sliced through this zone, And when it ran out of steam, price retraced to the zone it sliced through and then continued in the direction of the slice. So 70% of the time consolidation, 20% of the time rejection, 10% of the time the slice. So here's where we opened last night. And we just kind of hugged the BBC, but we're below it. And so when we're below the BBC, we expect lower prices. When we're above the BBC, we expect higher prices. Now you can see a little more clearly on this chart what I mean when I say that the pullback to the BBC holds more often than it doesn't. But eventually it will trade through. Pullback held. Pullback held. Till it didn't, right? But then when we pull back from the other direction, it held. So we had a leg and a retracement yesterday, and the pullback held. Leg, retracement. So we had a leg, a retracement, and then another leg. When the market finds support, as it did at the short target, the short target was based off right here where red turned to blue yesterday. So we hit it, support. That sends the market looking for resistance, the BBC. It held for two 30-minute candles. Then we got above it. And then we had this candle open and close above the BBC. That sets the stage for the market to continue upwards. But it didn't. Yesterday it was the 10 o'clock candle where the reversal came in. Today it was at 10:30. Pretty much across all the markets, as it did yesterday. So we've banged that short target once, twice, 3 times, 4 times, 5 times. But notice blue and climbing has turned to red and falling. Okay. As red and falling crosses below the green line, if in fact that's what happens, then I suspect we shall see, possibly today, the zone below at 7290/91. On the Dow, this was the open last night. We just hugged the BBC. Now, same thing as we had a huge leg down, supported the zone, bounced back to the BBC, and then we hit the short target last night, this morning, about 4:30 a.m. Eastern. Got below it, found support at the zone, kind of like yesterday. Support sends the market looking for resistance. And so we got up to the area right where we had a bearish cross, right there. Let's see when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And it was. And that sent us back down below this zone. We attempted a rally, but we hit the black step line, and when that's directly above price, that becomes potential resistance. So now your next major area for support, it's going to be right there. And that creates a nice little window of opportunity. What do we got there? We'll call it 235 to 215. It's 20 points. Okay, it's enough to get your goal for the day. On the Russell, here's where we opened last night. Found support at the zone. Support sends a market looking for resistance. Resistance sends a market looking for support. Remember, when price drops to a zone, we expect support until proven otherwise. And then we hit the short target, which was based off where red turned to blue yesterday. The long target, where blue turned to red. We spiked it. We spiked the zone, but we failed to take out yesterday's high. But worth noting, we've also failed to take out yesterday's low. In fact, we're substantially higher, probably by about 50%. If we go here, yep. That's the 50% mark right there. From yesterday's high to yesterday's low. We're sitting right at that 50. On the NQ. It's where we opened last night below the BBC. We bumped our head on the BBC, or the pullback held. It held here. And then we found a little support at blue and climbing. We hit it again, but we never actually closed above the BBC. Blue and climbing turned to red and falling. So we had a leg, a retracement, a leg, a retracement, and a leg, which brought us right down pretty much to the tick. And that was based off right there. We returned to blue. The long target was based off the bearish cross from yesterday. Again, that's when the red line gets below the green line. If it leads to an extended move, the first time price revisits that area will almost always be good resistance. But we didn't make it that high, and we're headed back to the short target, it looks like. From 647, I mean, there's a good 30 points in here, back to the short target. It's right closer to 40. Crude, resistance at the zone. Here's where we opened last night. We gapped way up on crude last night. Goodness, we gapped all the way up to the long target. I hadn't really looked at that. Then we consolidated here. We hit the long target again. And then we dropped and we spiked this bullish cross right here. Okay, right there. That would typically be good support. But these markets are not what you would call typical market conditions. But the low of the day is highlighted by the weekly trading zone at 8740/45. It's the low of the session for crude. And the high of the session for crude at the zone, 9130/9135. Once we got through the BBC, the zone, and the long target, the pullback to the BBC held. Right there. So then we had a leg and a retracement, and the top side of the long target held as support. That's not unusual. This is unusual right here. Step line cross blue and climbing. We should have seen a retracement to the BBC, but looks like the black step line is going to cross back to the left side, kind of like that daily chart of the S&P. And if we take out the current high of the session right here, and there's potential resistance up here around 91.75, and then get up here around 92.35, and then you got the zone at 92.45. Gold, oh my goodness. Something's afoot. I'm not sure what it is, but this isn't normal. A leg, God, look at that leg, and a retracement, pull back held, leg and a retracement to pull back held. Now the step line has crossed back to the left side of red and falling, and price is below it, so I mean, we could consolidate here and get another retracement, or this thing could keep dropping. Still one more zone down below at 3960/61. Silver has basically gone from, well, we opened here, hit the short target, traded through it all the way down to the zone. Support sends us to resistance. The pullback to the BBC held. So we got another leg and a retracement. The pullback held. Then we got a leg right back down to that same zone, 6350/51. And we went from the zone all the way to the zone overhead, 6575/76. Then a retracement to the BBC. And silver actually looks like it wants to move higher. You got potential resistance right there at 65.31. And you've got potential resistance right there, 65.44. And then the zone. If we could overcome that high in that zone, there he is.
Here I am.
How you doing?
Here I am okay. How are you doing?
Good. All right, well, we're ready.
Okay, let me flip this back to a 19 range there, and this back to a 39 range there, and I will bring it over here. All right. Here we go. Should be looking at my charts now.
Yep, and it looks good.
Excellent. All right. Good afternoon, everyone. Today is Wednesday, the 10th day of June 2026. Now, if you have not taken a free trial with us and you'd like to take a free trial with us, then all you need to do is simply go here to mytradingiq.com, click on that purple button right there. There is no credit card required for the trial. When you click on that, it's going to bring you to, well, this page. On this page, all that we ask for is your name, your email, and your phone number. Down at the bottom gives you TradingView login ID. Okay. Once you give us TradingView login ID, we'll be able to get your indicators indicating on your desktop for you. All right. We had more trades today than we've had since April 1st, and we had our best day of the year this morning. So, some good stuff today. Good stuff. Yesterday was a good day. Today is even better. If you can read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 10th day of June 2026. We're up 303 ticks on the YanQ, 20 on the Russell, 106 on the YM, and 34 on the ES. That put us at $2,570 per contract on the morning session. Today it took 9 minutes and 7 trades to get to the goal for the day. At that point, we're up $3,250, and we took a total of 40 trades with just 3 stop outs. So 92% of our trades this morning were break even or better. So it was a good day. We had more trades, better trades, more follow through. Everything was better today. So let me just get everything ready to go over here so I can start taking trades when we get to it. And that's it. So on the month now, we're at 9,000. I went through all this, right? I don't think I did. On the month now, we're at $9,795, and 8 trading days were actually all the way up to $1,224 a contract. You know, I like to be over $1,200 on the month. And right now, after 8 days, we are this month. It's the first time since that month. I think that was March that we were managed to get over $1,200 on average on the month. So on the year, we're still below 1,200. We're well below 1,200. It's going to take a little while to get that up over 1,200 again. But if we have more days like today, then it can happen. On the year, we're at $104,415 over 97 days, averaging $1,076 per contract per 2-hour trading day. Following the 24/20 blueprint, this went up quite a bit today. It took us 9 minutes, but I think 9 minutes. Yeah, 9 minutes, but we were up quite a bit when we hit it because we had an NQ trade, a full NQ trade. So far this year, we've worked 14.85 hours getting the goal for the day. Now, if you were to quit when you got the goal for the day and had 1 contract per month so far this year, you'd be at 6 contracts right now. And you'll be up $49,142. All right. Now, that is if you had the same exact slippage as me and you were at 6 contracts and all that stuff. So you'd be averaging $3,309 per hour, right? $3,309 per hour. All right, now let's get into the actual trades. Okay, we'll start off with the Russell. The only one we were negative on today was actually, well, we were negative on the Russell in the beginning by accident, but the ES is the one we were significantly negative on. The Russell, we were a little bit negative because we got slippage. We got 8 ticks to slip on this first trade right here. It should have been +5 and it ended up being -3. All right, the next trade we took over here, we got 5 ticks. That put us at +2. Then we went from 2 to 5 because we had some more slippage. Then we went from 5 to 15, then 15 to 35, then 35 to 45, and then we stopped out somewhere right there. 45 down to 20, and that was where we ended it with the Russell. There were some really nice trades in here during the break. That was one, but this was a really nice one right here. Okay, there was one really nice trade there during the break. But the markets have been really active today. There's actually a Russell long right now. The markets have been really active today. So, and they've had really good follow through. So that's a good thing. And that did not fail me, you see, because my stop would have just bumped to break even +5. I thought I had gotten that on. I thought I did a drop on that, but I apparently dropped in the wrong place. Anyway, that was a long trade right there on the Russell. If you got it, I did not, as you can see. All right. Let's go back here for a second. The YM. Now, we did well on the YM today. I'm going to hit control back on that guy too. We had a lot of bars everywhere today, so. Oops, went right by it. All right, so the YM today. Now, the YM yesterday, we were -50 at one point yesterday on the YM. Today, we're positive all day. The first trade, we got 3 ticks, so we had some slippage on that. The next trade, we got 8 ticks, and then the next trade, we had 45. We got all 45 on that. Got us up to 53. And then we went to 71. Then from 71 we went to 81, then 81 to 96, then 96 to 106. And that is where we ended it with the YM, it looks like. Yep, that's where we ended it with the YM. And right now the YM does not have a trade. Okay, it does not have a trade here right now. It is in the green, but headed toward the YBR to flip. Now the ES, we did get negative on the ES today. Part of it was due to slippage, and part of it was just due to stop out. But we'll get back to the beginning of this here in just a moment. Wow. There's a lot of bars here on the ES. Okay, here we go. On the ES. The first trade here on the ES, I put a break even, but we actually got slippage. We ended up slipping 7 ticks on that one. That gave us a -2. All right, and on this one, I put a break even. Oh, on the ES, I'm sorry, we just slipped 1 tick on that. On 2 ticks, that put us at -2. On this one, we got another break even. I had a lot of break evens on the ES today. Another break even, another break even, another break even, and then finally we stopped out. So after the stop out here, we're at -12 because we had those 2 ticks to slip on the first break even. Then another break even. So how many break evens is that? That's like 6 break evens and 1 stop out so far. Finally, we had a decent trade. We picked up 10 ticks there. That got us to -2. Then we went from -2 to +4. So we picked up 6 there. Then another 10 right there. That got us to +16. Then, excuse me. I don't know where it is. We had, okay. We went from 16 to 24 right here, and then 24 to 34 right there. And that is where we ended it on the ES. Right? If we go all the way to the end, we do not have an ES trade right here, right now. Okay. And that was it on the S. So the NQ was starting to tank again. Let me just go look out here and see what my little SOSXE is doing. All right. That's good. This is not at the high of the day, but it's getting pretty close to it. The high of the day was right here. Yeah, I did get out of that already. We'll go here to the NQ now. Let's just click on that and we'll blow it up. All right, on the NQ, we need to control back on that one. And there are a ton of bars here on the NQ as well. All right, here we go, all the way back to the beginning on the NQ now. The first trade was right here. On that first trade, we picked up 10 ticks on the first trade and then 50 ticks on the next trade, that one. That got us to 60, then went from 60 to 70, 70 to 80, then 80 to 129, then 129 to 139, then 139 to 149, then 149 to 180. I can find that right there, 149 to 180. And 180 to 190, 190 to 199. And we stopped out, but that was somehow we only got 10 ticks on that stop out. We only lost 10 ticks on that stop out. So we went down to 189. And on this one, we went from 189 to 233. And I don't know if I marked all the rest of them. I don't think I did. Yeah, I guess I did. Then 233 to 243, 243 to 253, and 253 to 303. This was our last trade right here. We picked up 50 ticks on that. And that was it. That is where we wrapped it up. If I go all the way to the end, we do not have a trade here yet on the NQ. All right. It did go full cycle after the last time it came out of the overbought. Here we are in the overbought. Now on the down close, this isn't going to be a trade because it's not flat on the bar before, so that's not going to be a trade on the NQ. Okay. So with the NQ tanking right here, SOSX is moving up. That's what I had anticipated. And that's it. Right now, we are just about to have a trade here on the Russell. We just need a down close there. We just need a down close on the YM. So Russell and YM need down closes to trigger trades. The ES and the NQ are not valid trades. All right, we just triggered on both of those. Here's the Russell. And the YM, it's bumped there. YM just went to +5. So we're going to go to plus, it's 11 on that. And we got +5 on the Russell and +11 on the YM. Okay, here's what we just got. Let me write that down. Okay, that's what we got so far in this session. So that is almost the goal for the day. Those two trades right there is almost the goal for the day. Now, I've been telling you guys, if you missed the morning session, you can usually come here. And we have 16 minutes today. That's about the average that we've been getting, 16 minutes in a session. And we have 16 minutes left in this session. And so usually in those 60 minutes of trading, we are averaging more than the goal for the day. And that right there was just about the goal for the day. As a matter of fact, I'm not sure where I filled on the YM. I know it looked like it was 11, and it was exactly 11. And on the Russell, the Russell was actually 8 ticks. It was 8 ticks. I can show you that. So We're actually closer to having the goal for the day. We're only one tick away from having the goal for the day in this session. Here, I'll show you the Russell. I'll show you the Russell and the YM. These are those two trades. There's the 11 ticks there, and there's 8 ticks right there. Okay. In the meantime, the ES almost has a trade right here. The NQ actually does have a trade. And yeah, okay, that just bumped my stop to plus 10. So that would be the goal for the day right there. The ES didn't hit the mid-band. All right, I think the NQ did. Yeah, the NQ did. All right, so we got a plus 10 on the NQ. No, it looked like plus 10. I don't know what it actually was. Let's just look. It was exactly plus 10. Okay, show you that too. Yeah, that is right there. All right, so 1 NQ, that is more than the goal for the day at this point. You're now up, well, 29 ticks equivalent. So it's $145 per contract right now. A down close here on the YM and down close on the Russell. Both be trades again right here. They won't be trades here on the NQ and the ES, but on the Russell and the YM, they will be. Nope, I'm sorry, the YM's not. The YM's not. Cancel the YM, cancel the YM. Go full cycle right here. So that is not a trade. If the Russell closes up, it's not going to be a trade either. If it closes down, it will be a trade right here on this bar. That's got a high of 7.3. So right there, that's the trade on the Russell. Here it is, minute 5.1. Okay, we flipped the YBR here on the NQ, but it doesn't look like it really wants to go up right here. So let's just give it a minute. That's plus 5 over here on the Russell, and we're out with 5 more on the Russell. Right, these markets have just been great for trading today. You know, I can knock on wood right now, but they have been. Everything that I've been wanting have happened as we finally went full cycle here. So we're just adding on to our best day of quite possibly the year. It's the best day since, it could be the best day of the year. I'll have to go look. A down close on the NQ and a down close on the ES would both be trades right here. There's the ES. The ES took me out of break even already. The NQ, I'm no longer in that either. What happened with that one? The ES was right there, and the NQ gave 9 ticks. I'll show you those. These are those trades. ES break even and the NQ with 9 ticks. Okay. What did I get on that? I added that in earlier, right? Yeah, there's extra ticks there. Nothing here, nothing here, nothing here, nothing here right now. So we're just gonna wait. We now have about 11 minutes left. So we've had 2, 4, 6 trades in the last 5 minutes. Let's see what happens here. Let's go out here. See what my guy's doing. All right, he's up. Well, this isn't the high of the day, but that is the right direction. Let me go see what the options say over here. Oxy had a high today at 360. Okay, so the options are actually right at the high of the day right now. So I held on to them. I got a little bit more out of it. It happens. All right, so right now we have nothing here, right? It's going to be flat on the bar before. It's possible we could end up with a trade here, but I think if it does go up here, it's going to end up flipping the YBR. See right here. It could close down and give us a trade. I don't think it's hit the YBR, but you kind of have to wait for it to give us a down close. It didn't put in a lower swing on that last one, so it's showing just a tiny bit of strength on the upside and weakness on the downside. Okay. All right, that is actually a trade right there. And I looked away. I missed it. Sorry, that was actually a trade right there. And again, it showed weakness by not putting in a lower swing. It's going to flip to YBR. And nothing's going to happen there. The YM on a down close right here would be a short still. And that did show strength on the downside by putting in a lower swing. So it's got a high of 43. So we should be selling, oops, not that. Selling 23. No, it's going to be too far away, I think. Always on top. And then this number here is at 26. It can't go above 46 and just, so we have to cancel it. It's too far away. All right, that is not a trade. It didn't hit the mid band. This one didn't either. So Gordon, PPI out tomorrow. PPI out tomorrow. I have a better feel for it in about 2 hours. This was not a trade. This was not a trade. They all look like they're going up to hit the YBR right here. The airlines got hit today for some reason. Delta United. These could both be trades right there on the NQ and on the ES. Okay, they both were trades. We ended up with a break even on the ES, and I'll check and see if we got the 10 ticks on the NQ.
That Apache helicopter getting shot down may have somehow affected airline stocks. I realize that's not exactly comparing apples to apples, but
yeah, well, you never know. You will not want to fly. Okay, that was 10 ticks on. All right, so we have 3.5 minutes left. We've had quite a few trades in this session. 1, 2, 3, 4, 5, 6, 7 trades so far. And we almost had another one right there if it would have hit the mid-band.
Almost.
This looks like a long trade if you didn't have the background color. It's 50% retracement of this leg up when you were sold, but it's not. So if we go out here again, the ES is down near the low of the day. This, the SOXL, and the SOXX calls. This was the high of the day as far as it ran today, but the actual option price was at the high of the day right here a few minutes ago. So they're really primed to move up. The option prices are. If it starts going down some right here. But I sold them. I'm not in them anymore. But if I click on refresh right here, and click on that, and choose that strike price. All right, they're not at the high of the day right now. They're 5 cents off the high of the day. I think. Yeah, 5 cents off the high of the day. I sold them 10 cents off the high of the day. All right, we just flipped the YBR right there. And, it's green. This got to have an up close and then a down close, so it's not going to happen right here. The Russell could actually turn into a trade. If it goes up anymore, it's going to flip the YBR, but it could close down and give us a short. I don't really like it, but if it did, it would be a short trade. It's got a high of 59.6. It would be 57.6 as we'd be selling like this. I like that. Did you see that? I just got 5 ticks of slip in that. 5 ticks of slip.
wow.
Just like that. Bang. Oh, it was a valid trade. This was a valid trade over here, a long trade on the NQ. I did not notice that. This was a valid long trade here on the ES. I did not notice that either. Those weren't the ones that I just missed a minute ago, were they? No, I ended up with a break even on the ES because it went so fast, and I had a plus 10 on the NQ. That was a few minutes ago. These just happened. All right. A lot of times when I have my order waiting like that, I don't see the slippage like I just did. But it's a little more bothersome when I actually watch it slip me 5 ticks. That was ugly. I was not first in line, that's for sure. It's got a chance now. It's got to get down to 6.1. It's almost there. There it goes. All right, plus 5. That's plus 11. it was going to be a lot more than 11. There we go. That was 21.
Very
I think.
nice.
That worked out. I think it was 21. Let me go see. It was 7.6 times 6.6 is 10 down to 5.6. It's actually more than 21. They gave me a lot of slippage. Positive slippage that time. They actually made it up. I mean, I'm trying to do the math in my head, but for some reason I can't. But here, hang on. That's not showing the whole thing, but this was it right here. 7.6 down to 4.9. So that is 27 ticks, actually. 27. My DOM's on top of the rest of it, so you can't really see the symbol in there, but it was 27 ticks. That made up for the slippage at the other end. Oh wow, it's 1:31. Okay, so we got to fill out the thing. I didn't realize what time it was. Got to fill out the thing.
Gotta fill the thing.
Insert one row above. So today it's just getting better and better. 6:10. On the NQ in this session, we are at 29. On the Russell in this session, we are at 30. On the YM in this session, we are at 11. And the ES we had a break even. But we had 4, 7, 8, 9 trades, 0 stops, and this was another 16 minutes today. This becomes a 108. Okay, so we'll bring this down. This copy, paste 100% again, and this. This is a big number. Did we beat yesterday? I think we did. Just barely, but yes, 3,500.
Nice
So that's how we're going to wrap it
job.
up. Yes, it worked out all right. Again, look at $350 a contract or 3,500 with 10 contracts on. But you all could have gotten in there, and I missed a couple of really nice trades in there. 29 ticks on the NQ, 30 ticks on the Russell, 11 ticks on the YM, break even on the ES, 9 trades, 0 stops, 16 minutes. So we're averaging 16.48 minutes in these sessions of trading time and $118 per contract. All right. If you've not taken a free trial and you want to, go here to mytradingIQ.com, click on the purple button. Once you click on that, it's going to bring you to this registration page just to fill it out. And that's all you got to do. All right. So with that, I will pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep. Okay, recap of the morning session.
And this morning it took 9 minutes and 7 trades to get to $3,250.
Good job.
Thank you very much.
Okay, guys, we covered all the markets in granular detail, as we do each and every day. We're back below that 24% fib retracement on the ES. And so yesterday's low was, hang on, I don't think that's right. Let's see if we can get it right. We said to call it 72.48, just to be conservative. So if we take that out, 72.48, and you got a decent window of opportunity right there. 72.48. Once we get through 72.48, if that's how it shakes out, then 7,200. Another 48 points. Down to this low, and then the next spot is the 38% fib. And again, the area that I'm eyeballing looks really important to me. It's right here. Across these tops, across these lows. So that's just below the 38, but above the 50% fib retracement. We don't have any fib extensions on this because we just don't need them because the markets are dropping. So that's where we stand as we wrap it up. If you missed any part of today's broadcast at all, 10 minutes after I sign off, go to youtube.com/CFRN, and you can watch all of today's broadcast in its entirety, or you can fast forward and watch any part you want. To become a member, get a hold of Valerie. You can call 949-42-EMINI, leave a voicemail, or you can email her support@cfrn.net. Just let her know you're interested in becoming a member. She will send you by email all the information you need to make a well-informed, intelligent decision as to whether or not what we do is right for you. Once you become a member or passport holder, you get 2 hours of live training every trading day. Now, these are real trades in real time, live markets. It's an interactive environment. In other words, as Michael is putting on and taking off trades and explaining every move he makes and every trade he takes, you're trading along in your demo account because you got to qualify to go live. You don't just jump in with real money and just start throwing your money at the market. That will just get you what you've gotten in the past, another blown up account. So interactive training, 2 hours every trading day. That's important when you consider that 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. Lots of folks will sell you indicators and oscillators and all kinds of things. But finding somebody who will actually spend 2 hours a day with you and teach you how to do it, that's pretty difficult to find. But that's what we've done for a lot of years now. On top of the 2 hours of group training every trading day, you also have access to private one-on-one mentoring. There's no extra charge. All you got to do is ask. The strategy you learn and the indicators you use as a passport holder are fluid across all markets and all time frames. So what you see Michael doing with futures every day, the same thing works with stocks, crypto, Forex, ETFs. Doesn't matter because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you get the Logic 247 alerts. You get the concierge trade alerts, typically 5 minutes ahead of the Globex Open each evening. Every Monday morning, you get the weekly trading zones. And we're on the summer schedule for the members only workshop Thursday nights. So when the next one is approaching, you will be notified. I don't believe there's one tomorrow night, but whether or not there is, you'll be notified. Valerie will post it in the discussion group and probably email you as well. Last but not least, you get the golden keys that open the private channels in Telegram, and there's quite a few. Everything a trader needs, all under one roof, one low price. Just get a hold of Valerie, support@cfrn.net. Let's wrap it up with our good word for the day. You can pull down that stronghold. 2 Corinthians 10:4. The weapons of our warfare are mighty in God for pulling down strongholds. Just as Jericho was a stronghold in Canaan, we all have strongholds in our own personal lives. Paul wrote, the weapons of our warfare are mighty in God for pulling down strongholds, casting down arguments, and every high thing that exalts itself against the knowledge of God. A stronghold is an argument or a high thing that exalts itself against the knowledge of God. It is a conviction, outlook, or belief that attempts to interfere with the truth. A stronghold is a false premise that denies God's promise. It sets itself up against the knowledge of God. It attempts to magnify the problem and minimize God's ability to solve it. Does a stronghold have a stronghold on you? Do you speak the language of impossibility? God could never forgive me. That's the stronghold of guilt. I could never forgive that person. That's the stronghold of resentment. Bad things always happen to me. That's a stronghold of self-pity. I have to be in charge. The stronghold of pride. I don't deserve to be loved. The stronghold of rejection. I'll never recover or get any better. That's the stronghold of defeat. I must be good or God will reject me. Stronghold of performance. I'm only as good as I look. The stronghold of appearance. My value equals my possessions. The stronghold of materialism. Many Christians don't even recognize the strongholds in their lives. But you don't have to be among them. God has given you the weapons of prayer, scripture, the name of Jesus, the blood of Jesus, fellowship, etc. And collectively, they have divine power to demolish any stronghold. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.